Hi all, welcome to TCM Education. In this video we're going to recap two of the best winners over the weekend, but let's start with the worst of the worst. Two losers after Friday's session. Let's start with actually the worst. SRPT, that's Sarepta Therapeutics. Now what happened is the worst nightmare for a biotech company, and there are plenty of bad news surrounding this 35%, nearly 36% loss of a stock that was in May $64, so now $14. That's in a strong market, but you know that's the life when you're dealing with biotechs. So I'm reading here from Reuters. Sarepta Therapeutics are committed. So hold on a second, that's not the right one. Sarepta Therapeutics FDA requests halt of ENOV shipments to the US. That's according to not Reuters, Express News, and Reuters reports a death of a patient, and anyway, ugly stuff, and it immediately translates into, I mean, we can see the chart here. That's awful. So we have two islands, this island and now this island. So the stock is down, I don't know, 80% in the last 3 months. That's super ugly. So now let's dive into the 3-minute chart and see how day traders traded this event. So obviously we can see this huge gap down immediately in the morning session, and again there were buyers at 17. The stock opened at 17, and it had a $2 which is translates more than 10% of buying here. At one point, obviously, a fresh piece of news came out. You can see the huge pickup in volume after 12 noon, and that was probably game over for the stock. So once it broke 18 here, after 12, shares actually dissolved. And let's bring in the view up. I don't know if it's going to help us with anything. I don't know, maybe. So if we look at the chart, some optimism in the morning after the big gap down, but really, I mean, the stock had zero chance of closing this huge gap. But there were buyers. Volumes were good, but like I said before, the volumes on the downside, probably on a fresh batch of news. I don't know if it was the FDA, the death of a patient, or both, or the company saying something. Anyway, so where was the money trade? Obviously, it's clear that on the downside, this entry, and we're looking at this round number 18, was clearly the money trade. And the risk on this trade, obviously, it's not a 1% risk. Keep in mind, it's a double-digit mover. It's a bit spready, so there was a risk here. I would assess on this trade the reasonable risk will be 2 to 3%. 2% here is nearly 40 cents, so it's 40 to 50 cents. If we look at it closely at the chart, is actually 50 cents is reasonable. So the risk reward on this move, in retrospect, obviously everything is in retrospect, because we are talking about the stock now when we know it closed at 14. Unbelievable. Now, were there additional entry points? Hard to pinpoint, but there were reversal plays, and again, it picked up momentum to the upside in the morning session. So when the stock is down so much from 22 to 16, it's like $6. That's how much is it? 20 to 22%. So when a stock is down 20 to 22%, a 5% move up or a 5% move down is on the table. So you need to take into account both sides of the market. Obviously, there were buyers immediately at the open. So anybody that was accounting here on a gap down and go had to either suffer a lot of pain or a losing trade. And there is no reason to take the stock from 17 to 19 just to guess that it may turn around 3 hours later. So clearly a losing idea. Then there were a couple of breakdown levels. I think as always the round numbers are winning. And again, were there other entry points on this move from 19 down? Yeah, but there was no signal until it broke with huge volume 18. Keep in mind, this stock is shortable, but I don't know if shorts were available at any level here. That remains. That depends on the broker, on the quantity, on the timing. So a lot of factors here. So it's not like you want to enter at 18, you're guaranteed a fill at 18. No, sorry. Maybe you're not gonna get filled at all, basically. But again, that's my assumption, knowing how this stock trades and how at times there are issues filling at certain points, especially at the clear resistance, support and resistance levels. I mean, the volume was huge. The volume was 1.2 million, nearly 1.3 million shares versus an average of 1/10 of that. So there was 1,000% pickup in volume. Obviously, that was news driven. So if we want to summarize what we've seen here in SRPT, a brutal reversal that I don't know if it was called for, but worked for nearly $2. That's a lot for a reversal in such a huge gap down. Having said that, the move or the trade was clearly that breakdown level, which carried some risk. Obviously, any trade carries some risk. If we're looking at the chart here, yeah, I would say 45 to 50 cents of risk. Yeah, 40 to 50 cents of risk, and if you're up for it, you can take this trade. If you're not up for it, and again, even if you're up for it, you're not guaranteed a fill at 18 or below, but that's pretty much the risk on the trade. So 2% at least, maybe a little bit more. The outcome was unbelievable. The outcome was at one point the stock broke the $5. I don't know even how to compute the risk reward here. It's like 40 cents to $5. Let's say it's 10 to 1. 10 to 1 intraday is staggering. Actually, we've seen 10 to 1 on the upside when the stock is crashing so much intraday. All you can do and say, wow, again, that's a 10 to 1 move. Eventually it ended up with a $4 versus 8 to 1. Still amazing for anybody that dared short this stock and was obviously filled. According to Mumu, it's shortable. So again, it depends on the timing, depends on the broker, depends on many other factors. Obviously, when you buy it long, when you buy a long position, nobody cares. It's all good. So that's regarding this Sarpeta disaster. Another, maybe one of the nicest short plays that I've seen lately is ENOV. Now, we've seen stocks crash here and there. This stock ended up down 15% and closed at the lows of the day. But take a look at the mellow or the way it traded lower. So that's actually alarming, because you see this price action and you're thinking, okay, when the volume will pick up and it will reverse and give us a trading opportunity, and it's not happening for 5 hours. So the stock drops down, gaps up, and since 9:40 it has 6 hours and 20 minutes of moving lower, where it moved lower without any pullback. I have to say that this is, I don't want to say one of a kind type of chart, but I wish we can get more of these events where a stock drops and you're looking for an entry point and you're thinking, okay, it's going to reverse, and you're looking for round numbers mainly, and it's just not doing it. Now, if you're looking for news, there were some hedge funds I see here that obviously Evercore maintains an obvious with a buy rating, but cuts the price target. Again, there was some obviously some bad news here, but Jeros Fat Research says short the company, whatever. Again, I don't know what's behind this move, if it is a downgrade or an investment company or hedge fund advising against shorting it. What's weird, again, if we're looking at the intraday chart, is the price action. Absolutely no pickup in volume. And if we look at the daily chart, let's take a look at the 3-month chart, you can see that obviously in retrospect there was a pickup in volume, but nothing like significant. Okay, so the volume overall yesterday was 4 million shares. The average is nearly 3. So there was a pickup in volume, or some pickup in volume, but nothing that will stand out. Not to mention the stock gapped up in the early session. So it came into play for many day traders very late. That was obviously an issue, and it came down not only late but seemed extended and totally lackluster. So where was a good entry point? Basically any entry was a good entry point. Any entry. There was absolutely no distinction between 29 or 28 or 27. I have to say that I don't remember seeing such an amazing chart. So that's ENOV, down 14%. Anybody that participated here, you couldn't ask for an easier trade. Absolutely no risk. Once you enter the trade, it goes straight down. Perfect. So now after analyzing those two losers, let's move to our winners. Okay, so two losers. Now let's take a look at two winners. Now, why IVZ? First of all, it was very easy to observe it early in the morning. It had a huge gap up from 17 to over 18. That's more than 5%, so it immediately popped up on most of the screeners. I don't remember that if there were, there were obviously other stocks, but this one really stood out in terms of price action, volume. It ended up trading 36 million shares, which is important. If we look at the daily chart, hold on a second, it also showed a breakdown over round number 18, and that's that was very early in the day, so and nobody's watching IVZ, that's for sure. But it had some intriguing qualities. If we're looking, so first the gap up, the huge, that was easily observed. Let me point it out on the chart. Huge pickup in volume. That means the news, even if it didn't report earnings, and obviously I wasn't looking for earnings. Nobody was looking for earnings in IVZ other than those who know the stock. If it reported earnings, I don't think it did. There were obviously some news. That's an investment company. I don't know why I'm trying to read if there is any news regarding the stock. I don't see any. But again, we don't have the time to read the media in the middle of the trading. Those who have the time will miss on the trades. So this one had an potential entry early on at 18. Then it had this consolidation at 1850 with a triangle level, and very little risk, like 1%. anybody that got in at 18 and closed the trading day at the close of the trading day at 20, that's a 10% intraday move. I mean, that's a dream for a day trader. There were obviously other great entry points. I'm just pointing to one at 1940. It didn't really came down to the view up ever during this trading day, so there were a couple of bull flag entries, but I think the best one was, let's put it this way, 1850 is a reasonable one. Any other entry was a winner as well, not as big as the 1850. 1840 for 50 cents, risking half of that, less than half of that, is also a great intraday move. And again, the strength in this move was the stock closed at the highs of the day. I mean, that leaves a lot of speculation into what it can do Monday morning. So an easy trade, plenty of liquidity, amazing trend all day, is basically the total opposite of ENOV, which moved down 6 hours. This one moved up. You know what? It had a one minor pullback, but basically it moved up 6 out of 6.5 hours. So that's one stock that could have been easily observed. Another one that wasn't that easy to observe was Sable Offshore. And again, I will show you both of the list that I was using, both for longs and for shorts in a second. This is Sable. Let me refresh the chart. So this is how it looks. This green line represents the 9:30 cutoff between the previous day, meaning Thursday, and Friday. So it started actually with a pullback, but what was nice here about this pullback is that it hits the round number 28 for more than 2 hours. You can see here that the stock basically sits between 10:30 and after 12:30. If you observe it, you must act. If you don't observe it, tough luck, you're not going to trade it. But you can see here clear support at 28. That means that you can enter anywhere. 28.10, 28.15, 28.20, 28.50 obviously. 28.50 is it's like a power play. And more important than anything, it closes at the highs of the day. Now, the issue with this stock, there is an issue here, no doubt, is how do you observe it? Because when it sits above 28, you don't really observe it. It's like down with many other stocks, and it's very hard to observe. So you needed this stock to be on your watch list from the prior day when it actually moved a lot into the close. And if we watch the 3-month chart, let me bring it in. So there are always issues. So if you watch the 3-month chart, you can see that actually the big day wasn't Friday, was Thursday. So it's kind of a continuation play. Again, that means that you need to pay attention, and if you don't pay attention, you cannot be taking a 10% intraday winner. Now this intraday winner was with that's the big deal. Very little risk. Okay, that was the big deal about this trade, is that you could have entered this trade. Let me again refresh it. I don't know. Okay, you could enter this trade above 28. That's the big deal. Other than that, nothing special. So again, here we use the support level to enter a trade versus breakout levels, bull flags, all kind of intraday setups. Here, if you observe and take advantage of the clear support round number, and that's super important, round number, then you can take advantage of this trade. Okay, let's move now to the list. Let's see. So the basic longs that I used to basically look for trades required price above $10. 5 million shares traded, that's a given for anybody that's following us. So 5 million shares, obviously. Price above $10, that's a given. Then lower the range percentage from 10 to 8 just to gather more track into this list, because some of the stocks here are not really tradable, or either they are very spready, or there are stocks that you want to be staying away from, like a CYCC, and you don't want to be in that business. So that was basically the only thing that we needed to compromise with. Other than that, volume 5 million, stock price over 10, change percentage over 5, no big deal. That's with regard to the stocks. We got only 12 matches. That's very poor for, and again, we can explain it by the poor performance in the markets Friday. And on the negative side, basic shorts, here more stocks, okay, more stocks, but you need to understand that when you have short plays, you know already, again, if you have some experience, that some of the stocks here are not shortable, or either they are too spready, or for example CRWV, we know that it's not shortable. We know that BKSY is not shortable. We know that SBET is not shortable. We have MSTR, there's an issue trading it. Huge spreads. I mean, it can be tradable according to percentage, but basically you want to stick to a non-aggressive approach when you're dealing with the MSTR. So again, here the same strategy. Stock price above $10. Volume, we lowered our standards to 3 million shares. Intraday range, instead of 8%, only 4%. And change, instead of 5-4. So basically the same strategy, just we want to gather more than 10 shares, because if you gather 10, you may only have to look at 5, and out of those 5s you'll have maybe one. So you need more. On the short side you need more, because you can eliminate very, very fast a bunch of stocks, mainly those that are not shortable. So what's the purpose of being on this list if you're not shortable? And again, shortable changes sometimes, and there's even the event where the stock is shortable, but you won't get filled with the shorts. So that's that regarding short trades. Okay guys, thanks a lot for being here with us, and do like and subscribe to our channel. And if you have any interest, and hopefully you are, in our mentoring sessions, do email us. Thank you for being here, and we'll see you in our next video.